Hey everyone, this is Kirk here again at OptionAlpha.com. This is the members only video update, 6:30 on the dot, Monday, June 4th after the close. So, what I'm going to go over here tonight are a couple things. One, our current portfolio for June, obviously most important. We don't have anything else for July yet, which is fine by me, considering the market just keeps on falling. And the other thing I want to go over is some of the technicals because I've had a lot of questions about, well, how do you know when to get into a trade or when not to get into a trade? So I'm going to go over that tonight as well. So before I do that, I wanted to jump at the USO chart. I think this has been one of the coolest charts to watch in the recent kind of correction, quote unquote, that we've had. And I got to admit, I thought it was bottoming out a couple days ago when I sent out that other video update, and I said I was waiting for it just to really kind of show that it was going to take control and really move higher than 35, right? Kind of break out of this downtrend. And boy, it didn't do that at all. It just continued to fall. And so where we are at right now is you can see these three green areas on the chart. They're all exactly the same as far as the proportionate distance or the percentage move down that they've had. All pretty much exactly the same. So you can see we've made a move that has historically been one of the longest moves that USO will typically make. So we could find some really good support here. We're starting to see some of the indicators start to roll up higher, like RSI and CCI and stochastics, all starting to roll higher and show a little bit of bullish divergence. But again, what we really need is we need a solid base to form first, which is going to take a couple days. And then we need just that 1 or 2 days where it kind of breaks out of the trend, right, and starts to move higher. So that's what we need first. But this is obviously a good trade. If you have a portfolio where you're holding long stocks, you can't trade options or whatever the case is, this might be something that you might want to add to it, at least as a long-term trade. The other thing I want to take a look at, obviously, is the current portfolio. So what we have here is we have the portfolio for this month for June. So all we have is just this one short 110 DIA put. No problem with that at all. And then the bulk of our money is actually in these two credit spreads for the month. Again, no iron condors, just hasn't been a good time to trade those. But these two credit spreads are looking great, and we put them on at great premiums. We did, I think, a pretty good job on entering the RUT call spread. We could have done a little bit better on the SPX put spread, but that's water under the bridge at this point. And really, like I said, it's actually looking very, very nicely. So you can see here's the SPX. Our first strike at 11.55 is still a considerable distance from where the market closed. So we've got a lot of room to go and not much time for the market to make that move. So I like those odds as always. If you actually take a look at I guess the biggest pattern that's kind of evolved on the charts over the weekend is this this bearish pennant or bearish flag pattern. It's actually a really cool pattern. It doesn't happen that often, so let's go over it real quick. Basically what we've had is we've had almost a straight deadline move from the beginning of May until around the 15th of May. And then we had a little bit of consolidation, right? Some shorts covered their positions, some long traders started to get involved, and so that created this upward consolidation. It traded in this real tight range here. And then just this Friday, again, it broke out of this range. So technically speaking, the measured move for this type of trade is going to be the move or the length of the initial trade or the initial move. So we have an initial move that was about this long. So I've just recopied that green chart, and we're actually looking at a target right around 1200 if this whole thing plays out. So again, these things don't always play out the way that they're supposed to and the way that they do in the books, but that's the pattern. So if it does play out, 1200 would be a target. Again, our strikes at 1155 are more than good and safe right now. Okay, so let's get into this question about how do you know when to trade, when not to trade. So for me, it always comes back down to the technicals, right? Technicals and volatility. Volatility is on our side right now. That's a check. That's great, right? We got the VIX that's well above 20. It's starting to get up into the 30s. Hopefully it gets up there possibly this week. We can only hope and pray. But we've got volatility on our side. That's great. The next thing we need on our side is the technicals. And it's always best to never try and catch a falling knife, or at least that's been my experience. Is that every time you try to catch a falling knife, you end up getting cut. So what I mean by that is that if the market is continuing down, and even though the VIX is high, at least at this point, let's wait and see what happens before we start entering positions, right? We've got great positions on for June. July still has about 45 days until expiration. So let's wait and see if the market can start to form some sort of bottom. And if it does, then that's the time that we want to start entering some put spreads, right? We don't want to enter put spreads now and then the market continues to fall right into them and we have another situation like this where we enter, you enter trades and then the market just keeps falling and keeps falling and keeps falling. So we want to be a little bit more conservative about when we get into the market. There's going to be plenty of time once we start to form a bottom here that you can have some good premium. So what I typically look at all the time are some of the major technicals. CCI. CCI is one of the better ones out there. You can see that it's starting to make some higher lows here. So we're starting to see some of that bullish divergence, but we're not there yet. We haven't really flipped the switch and we haven't really gone totally bullish on CCI. If you actually take a look back here in December of last year, CCI flipped over in December and look how strong that signal was. That was the signal right there and really took us on a 3-month run. So you can see how strong these signals are if you just wait for them to happen. So again, what I want to see is I want to see some of these signals start to turn over. They don't all have to turn over at the same time, but they do have to at least be starting to roll over. MACD is another one that I look at all the time. I love MACD. You can see that we did have it turn over just in the later part of May here, but it's already gone back negative and we're starting to head back lower. So again, there's really no point at this point to jump in front of this if we could see MACD continue to move down each and every day and have just a huge sell-off down to 1200 or 1225. At that point, we're going to be getting wonderful premium with the VIX well above 30. So right now, patience is definitely a virtue. And then finally, things like RSI and stochastics, again, they kind of tell the same story that CCI does, where they're having some little bit of bullish divergence, and they've started to get back into positive territory. But again, RSI is continued lower, so we don't know if it's really bottoming out, if it's rounding out. As always, we want to take a look at that. The last thing I always like to take a look at, and this is actually one of my new favorite indicators, is the McClellan oscillator. And I actually did a huge post about this before, but we're definitely safely below the 100 barrier here. And that does not necessarily mean that it's completely oversold. You can see that actually back down here around the latter part of May, any readings down in the 300 range actually mean that it's way oversold, almost too oversold to keep going lower. And those were actually really good readings where the McClellan had gotten to around 300 and we saw little short-term bottoms. But right now, as it's just cresting below 100, it can still continue to move lower down to the 300s. So for this indicator, what you want to see is you want to see that move back inside 100 and really kind of back inside 80. That's really a signal that, okay, we could have had a not major catastrophe, but we could have had some charts rollover, but they didn't. And so they're starting to come back out and we're starting to see a lot more momentum come into the market, obviously. So that's what I typically look at. That coupled with, your general support and resistance lines, that's usually what I'm looking at. Volatility is already on our side. What I'd love to see now are just the technicals kind of roll over. So as always, I hope this helps. We'll be sending out updates and emails throughout the week, as always, if we make any trades. And let's hope for the VIX above 50. Happy trading.